Hi there, Mr. Evans here. Just going to have a look in this lesson at some of the different forms of business that you need to be aware of for the course. So we're now on to 3.1.2, starting off by looking at some of these different forms of business that are listed on the right hand side of the specification here. So this section, looking at different business types, is really about the legal structure of a business. It refers to the ownership of a business. The legal structure will determine the legal liability of a business for its debts. Is it the owners that are responsible for a business's debts? Is the business a separate legal entity? We'll have a look at that in a moment. It determines the sources of finance available for a business. The ownership of a business and its legal structure dictates what sort of records it needs to keep and publish. It dictates the degree of risk to the owners. It dictates the type of tax and national insurance contributions that will be made, and it also dictates the responsibilities and rights of the decision makers, the owners. So I like to represent the ownership of business visually. It makes it a bit easier to see. So you need to be aware that there is a public sector, which is that part of the economy that is owned and run by the government, usually for the purposes of providing a public service. So examples include the police, ambulance, schools, hospitals, the NHS, anything that is owned by the government with the aim of providing a service. Of course, in recent years we have had a large move from the public sector over to the private sector, things like the Royal Mail, British Gas, British Telecom, going back a while now. All of these things used to be owned by the government and for various reasons were moved into the private sector. But the public sector still accounts for about 40% or so of business activity in the UK. The private sector is that part of the economy that is owned and run by private individuals and organisations. So in other words, anything that's not run by the government. We can break down the private sector into non-profit organisations, which I'll come back to in a minute. But organisations that are unincorporated and have unlimited liability, and those that have limited liability. So unlimited liability essentially means that the owners of the business and the business are the same. There's no legal distinction between the owners of the business and the business. In other words, the owners have responsibility for the debts of the business. There's no separation, no legal separation between between the sole trader's personal possessions, their house for example, and the assets that they own in connection with the business. This means, of course, that if the business can't meet its debt, the owner is still responsible for meeting any debts that the business has incurred, and therefore their personal possessions may be at risk. You need to know about sole traders. If you've studied GCSE business in the past, you may have learnt about partnerships then. AQA have actually removed partnerships, so you don't need to know about them any longer, but I thought I would just include it in case you wondered where they were. Then we move into incorporated businesses. Okay, incorporation, we'll have a look at that in just a second, but it's the same stem as the word corporate. Okay, so these are businesses that have their own separate legal identity. Private limited companies often abbreviated to LTD, and public limited companies, often abbreviated to PLC. We'll have a look at the differences between them, but essentially the difference is that a public limited company is listed on the stock exchange, and anybody meeting certain requirements is able to buy into a company that is publicly listed on the stock market, whereas a private limited company, the shares are only available to a small group of people who tend to be sort of friends and family of the owners of the business. That brings us back to the not-for-profit sector, including mutual societies like building societies who are owned by their members. If you take a mortgage out with a building society, you become a member. They're not owned by shareholders, they are owned by their members. It's not to say they don't make a profit, the building societies often do, but that profit isn't then paid in dividends to shareholders. Oxfam, an example of a non-governmental organisation, an aim other than making a profit. I looked at the aim of Oxfam in a previous video. So that's quite a nice way of representing the business ownership types that you need to know. So I'll just quickly go over a couple of key terms. Limited and unlimited liability. So limited liability, the words limited in public limited and private limited company refer to the fact that these businesses, these organisations have limited liability, and that means an investor's liability is limited to the total amount they've invested in share capital. Whereas unlimited liability, which affects our sole trader here, is when the owners of a business are responsible for the total amount of debt of a business. Okay, so as I said, even if the business doesn't have enough assets to pay off its debt, the sole trader will need to step in, sell their personal possessions to meet any debts that the business has. Final couple of terms. An incorporated business is a business with a separate legal identity from its owners, and it affects our limited liability companies down here. Incorporation means that the company has been incorporated. It is a separate legal identity. The business can fail, it can go into liquidation, the business might sell off all its assets, it can own buildings, it can employ people, but once the business's assets have been liquidated, then that's the limit of the owner's liability. Whereas unincorporated businesses have the same legal identity as their owner, therefore the owner is liable for all of the actions of the business, including its debts. Okay, so that was a brief overview of the different forms of business. Next time we'll have a look at the pros and cons of different business ownership types.